All right, you guys can hear me now. I hate everybody. We can't hear you. Wow. Unsubscribe in the chat. Wow, that sucked because the introduction was so good. Like I was speaking so nicely. I was talking about so much stuff. No sound, muted amid all for nothing. This sucks. Yo, it's so, bro. The technical stuff is so Yo, someone literally just John, you DM me. You said muted on stream, dude. I always wondered what watching a meme give stock. Is it there now? Yeah, it's there. Damn, bro. It was good. The first 2 minutes were good. Well, now you guys will have to figure out what I said through like technical lip syncing analysis. I always look at the phone, right? But I was just like, I don't feel like looking at the phone. I just felt like going into it. And the mic wasn't on. Well, all right. Anyway, what I was saying was I didn't put a keyword in the title, so like no Tesla or the Fed or anything. I just did this picture. So I was asking who likes the title because I was just like, I was drinking and I was taking a thumbnail outside, and then I was like, I took the picture and I was like, oh, this looks like that emoji. I was like, we'll do that. Amid is legit. Dr. Z, Glitch Life, what's up? Yeah, it's funny because I run an audio startup and I can't even get the audio right. That's hilarious. Good morning, you puppet. Good morning, guys. All right, well, I was also saying the market's pretty boring today, right? So the fact that you guys couldn't hear me for 2 minutes, it's kind of indicative of how boring the market is. Nothing's really going on. I was saying we have a show called Money Talks that you guys all know about, and we were like in the pre-brainstorming session today because we meet at like 6:30 every morning, which is like my wake-up call. I get a phone call from Tom Nash, and he's like, "Wake your ass up," and I always wake up as soon as I get the call. So he's like, "Did you just wake up?" I'm like, no. And you know that voice you have when you wake up in the morning where it's just like, you know that voice, right? When you wake up and you say something like you could tell the person was sleeping, and he's like, you piece of shit. And but nonetheless, the problem is I sleep too late. I need to sleep earlier. But we woke up and we're like, what the hell do we talk about today? Because the market's kind of boring. Like, it's not that interesting. So when you're creating content every day, you kind of got to figure out like stuff that's interesting to talk about and that also gets people's attention. If you look at the pre-market, I mean, it's boring, bro. There's like either give me red or give me green, but all this gray, like, I don't know, there's nothing. It's kind of boring. I'm not gonna lie. Good thing I missed the first 2 minutes. The market is kind of boring. I'm not gonna lie. Now there is one piece of news that I wanted to go over on CNBC. The Fed GDP tracker shows the economy could be on the brink of a recession. Again, I feel like CNBC kind of, and I get it, right? They kind of just put this title because, you know, it'll get people to click about recession, but like, I don't know. I don't know if this is the best indicator. So the Atlanta Federal Reserve GDP Now tracker is now pointing to an annualized gain of just 0.9% for the second quarter, down from 1.3%, with first quarter growth down 1.5%. A second consecutive quarter of negative growth meets the rule of thumb definition for recession. I think it is inevitable that we all agree we're going into a recession. The question is, how bad is it going to be? Like, really, how bad is it going to be? Because if it's really bad, I mean, that's bad, right? But if it's not really bad and it's just like it's a recession, which is what we all want, right? Because a recession hurts everybody. Did you guys see Meet Kevin's new video as well about YouTube Pay? Did you guys see this shit? He was talking about how much he makes on YouTube. The reason this is being recommended, and I'm not the danger, I am the dangerous, because I saw this scene last night. Have you guys seen that Breaking Bad scene when he's like, I am the danger? Bro, I saw it last night. When he said that, he said, you think someone gets shot and I'm opening the door? No, I'm the one who knocks. I was like, yo, that energy is how I want to live my life, bro. That shit was it was just fire. Anyway, there's a Meet Kevin video about YouTube Pay. The dude is bringing in a lot of money per month, but I think he's saying it's less than what it should be. Like, it's not as much money. So like, here's this video. Look at the screenshot. Bro, YouTube is crazy. Like, this is why I'm so bullish on the platform as well. And we're going to get market open in about 4 minutes. Look at this. $125,000 in January. 122. That's 100 G's in 1 month. Regardless of what you think about the guy. Like, that's a lot of money, bro, for 1 month of making videos. Like, that's crazy. Now, also look at this statistic that was interesting. His top earning videos, why I sold stocks in crypto, the coming housing disaster, ending my channel. 3 of obviously the most clickbaity titles. If you guys want to know why clickbait happens on YouTube, it's just because it's not even YouTube's fault. It's what people click on at the end of the day. Like, it's just the nature of humans. So like a video about ending my channel that was probably like 8 minutes or something that obviously was false. He's not ending his channel. Made him $4,700. Like, it's crazy, bro. But anyway, the point is he was trying to make is like YouTube ad revenue is going down. It's down 21% than it was last year. And I was reading an article the other day about, actually yesterday, about digital ad spend going down. Let me see if I can find it real quick. And the argument was that digital ad spend from Facebook and Google is starting to go down. Also, we got to talk about Roku and Netflix because there's this rumor going around that Roku might be getting acquired by Netflix, which doesn't make any sense to me at all. Like, I'm just like, what? Why is that? Why would that happen? But yeah, the idea that like if Meet Kevin's revenue is going down and he's someone who's probably one of the highest paid YouTubers, then that means Google is not paying that much to creators because creators aren't making that much money because advertisers aren't paying that much. YouTube is pushing Meet Kevin so hard, but I still don't click because I don't want to give him any. Damn, some of you guys just don't like him. So it's you know it's tough to kind of, I mean, it's interesting to see how the revenue cycles are going. PewDiePie makes $1 to $2 million a month. He is not even trying. Yeah, well, PewDiePie also has like 150 million. So I wonder. I think if Mr. Beast put out his analytics, that would be one of the most watched videos that he ever had, ever. If Mr. Beast put out his analytics. All right, I'm not gonna miss market open. So as soon as it hits 9:29, I'm gonna set my timer so that I can time it correctly. Oh, boom, got it right on time. We got to talk about Robin CEO, SEC stock market, blah, 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 blah. We got to talk about the Netflix news. I want to talk about it. And then we're going to get into, here we go. So inside Roku, talk is heating up about an acquisition by Netflix. I want to talk about this. It's going to be very interesting, but we'll get into the market open and then we'll go there. Again, I expect markets to be pretty flat. I mean, we might move like 1% or 2%, nothing too crazy. If you are allergic to large sounds, get ready. If you have not waken up yet, get ready. It is time to wake up because the United States stock market is open. I love how it's like a countdown. Is open. My cousin from India is home and she's probably like sleeping in the other room. She's like, why the fuck is this guy doing this? All right, the stock market is open. Let's see what we've got. We'll go to the usual suspects first. So as we can see, it's pretty red, greenish, reddish. Let's go to Palantir. Let's start with them. PLTR. 919. Okay, not bad. 920. I mean, it's a nice little start. 644 Palantir was on May 12th, 2022. So if you bought Palantir at 644, you're up $3. Almost what? 30%? Something like that? Yeah, almost, no, even more than that a little bit. So if you got in at 644, man, bro, imagine if I had taken my 40 grand that I put into Palantir and put it when it was 644. Like, that would have been, that would have been so nice. Anyway, so Palantir is at 917. By the way, who has an average below $10 on Palantir? I would like to know. Who has an average below $10 on Palantir? LOL, love the bell, too funny. It's the stock market, bro. You know when you're a public CEO or when you go public and you ring the bell like they do when you go public. It's like this cool thing. We get to do it every morning because it's just like fun and it's our version of the stock market. Spotify. Oh, by the way, guys, did you know what Cathie Wood sold yesterday? I didn't even make a tweet about this yesterday. Okay, I didn't even make a tweet about this. Because we'll talk about it in a second, but we'll talk a little bit about what Cathie. She sold another 264,000 shares of a company, or 290,000, something like that. We'll talk about it in a second. Let's just go through the rest of the stocks, and let's discuss Tesla 720. Not bad. It's recovering a little bit. Elon's obviously in the headlines. I don't think this Twitter stuff gets resolved for a while, and if it does go to courts, it's going to be in courts for years. So if I was Twitter, I have no idea why they're just not letting Elon walk away from the deal. They didn't want to sell originally, right? Like, no one in Twitter wanted to sell. They wanted to run their own company for whatever political, social reasons, whatever. So they didn't want to sell. Now Elon's giving them a cop-out by saying, hey, we don't have to sell, or I don't want to buy, basically saying that. And they should just go with it. Now, if their argument is like, oh, the 5420 we're never going to get again, just build a really good company. You'll get it again. But, like, you had a vision, right? You expected you would get to 50, 60, 70. You assumed you would get shareholder price action and appreciation eventually. Go with your original plan. Like, just because the market tanked, the market's not going to be tanking forever, right? So I feel like Twitter will be Twitter, I don't know if you guys know this. Let me show you guys this real quick. But I don't know why Twitter's just not getting out of this deal. See, the market's boring, but we still have a bunch of stories to talk about, so we'll get into it. Twitter, this is a website called similarweb.com. Twitter.com, okay, is the 5th most visited website on planet Earth. 7.1 billion visits a month. They're going to be relevant. Oh, April numbers came out. Okay, yesterday this was only stuck on March. We're going to look at Palantir in a second. April numbers came out. So in the month of April, they got 7.1 billion people to come visit the website. The bear market will be over eventually. It's not going to last forever. Twitter can find a way to innovate. So I don't know why they don't just let Elon walk away if they didn't even want to sell in the first place. Management had such a hissy fit about selling to him. Don't sell then. Move on. Just go forward. But if you're obsessed with 5420, it's and the board doesn't even get 5420 because they barely own any stock. So to me, I'm just let Elon do whatever and then keep running the company and make it bigger. So I don't even know why they would have an issue, to be honest. Let's look at YouTube numbers, okay? And this is important in the context of stock prices because if traffic is slowing down or traffic is increasing but revenue is not increasing, that means there is a lack of correlation between the amount of people viewing something and what advertisers are willing to pay for it, right, in the context of social media. And if traffic is going down, that's another whole different question. I don't expect traffic to go down. So let's see YouTube, month of April. Look at this. Yep, traffic went up. 34 billion visits in March, 35 billion in April. YouTube is doing what they need to do. I know we're in June, but this website updates it a little bit late. So at least we're seeing, the progress from that. And this is one of the most trusted websites to do this. Okay, let's go to Palantir. So I think there was a lot of stuff going on in April for Palantir. Let's see if their traffic increased in April. Their traffic did increase. 465,000 people visited their website in April. Seems like the Palantir SPAC Lilium may actually work out. What if Lilium and Wejo do well? Then what about Palantir? I'm going to talk about William in a little bit. I just have to do a little bit more reading, so I don't want to talk about them yet. But yes, their flights are taking shape. I know they're making some progress. I'm going to write some articles about them on dailypalantir.com, by the way, which everyone should check out. I published a couple of videos yesterday. Oh, by the way, I'm going to do a video on this myself. But have you guys seen the Vice Media article on Palantir? Have you guys seen what Vice said about Palantir? I don't even want to read the article right now because I dive into it. But Vice essentially wrote this article. Where is it? Right here. Meme stock traders ecstatic after Palantir teases Ukraine war involvement. And they quoted Doom Shalat. I don't know if you guys know who Doom Shalat is. But if you're an OG Palantir person, you know who Doom Shalat is. Doom Shalat, shout out to you, Doom. He's the dude that comments this everywhere. And now he's on Twitter, so he puts it all on Twitter. So they kind of covered them in a more negative way. Look at the first thing they say. You might be surprised to learn that Palantir, a company that helps ICE to separate and deport families with this technology. And it's they just, they kind of get into it. So I wrote an article in response to them. Definitely check it out, dailypalantir.com. I highly recommend it. I'll make a video about it a little bit later today. But that's some of the stuff going on there. So again, my point on Twitter is I think they can just move on. I don't know why they have to, Elon can move on. I don't know, or Twitter can move on because Elon's moving on. Because they never wanted to sell in the first place. QQQ 309 recovering a little bit. It was at 302 yesterday. Let's look at the SPY. SPY's at 413. It was about 409 yesterday, 410. So it's recovering a little bit. Palantir 930. Okay, not bad. Up 2%. Not too bad. Not too bad at all for Palantir. Let's see what else we got. Google here. Tesla's here. Apple is holding strong at 150, 149. People thought, it was when it was at 132, people thought 125 was coming. If a recession comes, I do think that might happen. But we'll ultimately see. Netflix is above 200. Wow. Let's see if there's any major Netflix news outside of the Roku stuff we'll talk about in a second. Netflix. No, nothing crazy. Stranger Things. Who watches Stranger Things? Bro, I cannot get into. I can't. I didn't even try. I mean, I don't like the whole concept of that show. I'm just I just can't get into it. It's not my cup of tea. But then again, I watch stupid documentaries on YouTube. So I'm really weird with my content, bro. My content has to be super specific for me to. That's why I'm bullish on YouTube, because they give me a very specific recommendation. But I can't watch these big ass shows. It's just never been into me. OMG, they mentioned Doom. No way. Yep, they mentioned Doom. Okay, so let's talk about this. Now, this article is on premium. I'm not buying this because I'm not buying it. It's a $1 trial, $12.19 after trial. No, I'm still not buying it. I don't want to buy it. Let's just talk about it in general. Could Roku get bought by Netflix? So let's do the analysis here. Roku right here. Let's go to their Honestly, I might buy it because I do want to make a video on this. So I might just pay $1 to do some analysis here. Roku's market cap is at 13 billion. They do about 3 billion in revenue. So they're trading from their revenue to their market cap at a very, to do 3 billion in revenue, the multiple is like 3.2 or something. So they're very low. Their price of sales is 5. So it's a pretty low multiple on this. Netflix has a market cap of 89 billion. Also trading at, what is their price to sales? About 3, so they're even cheaper than Roku from a price to sales perspective. And they're at 2. So for Netflix to buy Roku's at 12 billion. Netflix is at 89 billion. What is the multiple you want to do on Roku, right? So Roku's at what? $98. If Netflix gives them a 300% premium, 98 times 3, they would be paying $294 a share. $294 a share would make the market cap 39 billion. Netflix has 84 billion. So would they spend 40 billion on Roku? Well, the question is, what was Roku's peak? If we go to their peak, Roku was at $490. Bruh, this was in April 2021. Roku was a $500 stock. Okay, so Roku definitely... Now, either Roku management is like, we know we're never going to get that again, or Roku was like, no, it was justified. We should be able to get that. It's a question, right? And so the question is, what is the premium? Typically in buyouts, you don't see like 100, 200% premium on, unless it's like a biotech company, which I'm in a biotech and I'm hoping we get like a nice ass premium. But Twitter Elon was only offering a 38% premium. You see like a 60, 90% premium. I mean, sometimes you see 100, couple 100% premium, but I don't know if they give Roku like a $300 share price, especially when Roku's not lived up to the hype ever since the hype fell for all stocks. So that would be a really interesting acquisition. I don't know if it would happen, but put it in the comments. Definitely want to see what you guys thinking about this, if you guys think that would happen. Amit, I am very excited to be getting in with your startup. Time will tell. Thank you. By the way, if anyone is interested in investing, so I haven't updated you guys too much. I had a meeting with a venture capital firm. Okay, let me just talk about this for a minute. I had a meeting with a pretty big venture capital firm 2 weeks ago, and then I had a second meeting last week. I think we're going to get it done. Now, I don't know if we're going to get it done. I've been in this situation before where you think you're going to get it done and you don't get it done. So for all those who have been keeping up with my startup journey, if anyone's interested in still investing, email me at amit@dailypalantir.com. If we close this deal, it's going to be very hard for regular people to invest because at that point, they're likely closing out the entirety of the round. So whatever angel money we've got in, which is about around $250K we've raised so far, then that money is going to be secure. If they don't close the round, then I'm going to open it to the... so my original plan with my startup was I'm going to open it up to the public and whoever wants to invest. For example, there's 164 people. If all 164 people invested $1,000 because, you want to take a chance on the startup, you believe in it, there's an idea here, you're like $1,000 doesn't break the bank, and let me see if this kid can actually do something, we would raise what we need to raise, right? Because we already have a decent amount raised right now by other private angel investors. But then I got to talking with this VC firm, and they were really interested in the idea. And so, I was like, oh, I don't have to open it up to the public. And obviously, having an institutional venture capital firm as a part of your, startup is huge. I mean, when you have an institution, it's just like when you have an institution, things change because now when you say, hey, I'm funded by XYZ institution, people look at you differently. They're just like, how did you get that institution to put that much money into you? So if that happens, we won't have to do a public raise. If they don't end up doing it, then I will open it up to the public and we'll see whatever we can get. But I've been in this waiting phase for the past week now, just waiting for them to respond. And we'll see. We'll really see. I hope it turns out. If it does, you guys will know about it. And regardless, around July, we're starting the content journey of showing you guys how I'm building my startup. And there's a whole lot of plans for it. It's just seeing if we can close this round now and get into it. I quit my job this month to go all in on the startup. So now it's just a question of can we finish this fundraising round and keep going from there. Emmanuel in the chat, why would I pay for Netflix or Roku when we got Amit live streams? I appreciate you, man. You mean the world to me. Emmanuel was the OG sub since I had 11 subscribers. It means the absolute world that you're still supporting me. And Emmanuel makes a lot of content, by the way. Everyone check him out in the chat below. He's doing a lot of content with Darnton's Media. He's a contributor now for their website, making podcasts with them. So I love that he's in the content game and doing his stuff. Okay, so I need to go to ARK Invest Daily because we need to talk about the next stock that they have sold off. So I made a couple of videos this week about stocks that ARK is selling off. Let's look at their sales from yesterday. Okay, 6/7. This is June 7th. Let's look at the sales that ARC has made. James Velez, I see you in the super chat. Can you? Good morning, Amit. Love your content. Can you check out VLTA? I will check that out after we do this Cathie Wood analysis. Let me go here. Arrow says, can you do a vid exclusively on your startup? Arrow, trust me, there will be a lot of vids exclusively on my startup coming. It's just going to take a couple of weeks from now, but yes, those vids will be coming. Okay, June 7th, this is ARC. Buy Roblox, 343,000 shares. Buy Roku, 58,000. Buy UiPath, 83,000. Buy Unity Software, 26,000. Sell CLTD, 10,000. Sell Spotify, 264,000 shares. Oh my goodness. And then in the ARC W fund, another sell of Spotify, 60,000 shares. She sold over 300,000 shares yesterday. She sold 190,000 shares yet. Oh wow, Samuel, I didn't even see Sam. If you're in the chat, I didn't even see you tag me in this. She sold another 190,000 shares yesterday, and then last week she sold 1.1 million shares. So I'm just can someone answer why is she liquidating this position? And I don't make too many predictions. I know it's kind of hard to make predictions, especially on YouTube with stocks and finance, and I try to stay away from making exact predictions. But one of the predictions I did make 2 weeks ago was that I believe she's liquidating the position. And it wasn't even a prediction that was hard to make. I saw it happen with Palantir. Wow, she's under 1 million shares on Spotify. 922,000. Wow. The reason it's a 25th. So she's gone with it. She had 2.3 million shares 2 weeks ago. Now she's liquidated to 922,000. The rest of it is probably going away. There's people were like, oh, she's freeing up cash to buy other stocks. You don't sell big 100,000 blocks of a stock to just free up cash. You do it maybe once or twice. And if anything, you do it maybe 30, 40,000 to get some extra cash. If you believe in a position for 5 years and it's a core position, you don't sell it. She's buying Nvidia and GM and all these, and Monday.com, all these other new positions off of the Spotify money. Why is she getting rid of the innovative position to buy into these other stocks? It's because she's likely liquidating the position. Why do you make a big deal out of Spotify being sold? Okay, it's interesting. Well, the reason about this is, so there's two reasons. Number one, I have a startup in the audio space, so it's and we are going to be competing with Spotify indirectly. We're not going to beat Spotify. Spotify's a amazing company. The music industry is essentially theirs. But it's interesting to me to think about the nature of audio, and I live and breathe audio content, even though I don't make too many videos about it. It's like my bread and butter in terms of thinking about it, discussing it, understanding it. And I really think there's a gap in the market space when it comes to audio. I mean, I fundamentally believe there's a gap in the market space. Spotify is not fulfilling that gap, is my thesis. And that is why I am so passionate about Cathie Wood selling this position, because I genuinely think of Cathie Wood as a smart person. And I'm like, why do you think Spotify is innovative? Because from all the research I've done, and I've done a lot of research. I've gone through their numbers, their operating losses, and forget the numbers. The numbers are fine, but you guys want to know how much research I've done on Spotify? Here, we're going to prove this right now. Look at this. Look at this right here. And the numbers aren't even the big part of the story. There's so much. Look at this. I didn't do an Excel sheet. I wrote out real numbers. As you can see here, almost 0.5 billion users. They grew 2% last year in terms of their premium subscribers, 180 to 182 million last quarter. Still having operating losses, even though they have 1 billion people's attention, and most of their free cash flow is going to SBC, and they can't really produce a profit. I wrote this out because when I had the meeting with the VC, I literally showed him this. I was just because I don't know, I think it felt kind of cool when you show up to a meeting and you don't pull up your laptop, and I wanted to show something handwritten. There's some value to just showing something with your, you put your actual pen to paper and you wrote stuff down. So the night before the meeting, I was like, I'm going to show this guy that the numbers suck. And as soon as I showed it to him, I didn't even have to convince him, bro. He was just yeah, these they're trying to be something they're not. And so the reason I'm passionate about this is because I don't really think they are that innovative. And so when Cathie Wood's selling out of it, it's incredibly interesting for me to see if she believes in that idea as well. Newt says, when can we invest in your startup? Email me amit@dailypalantir.com. I will give you the information if you are interested currently in doing that. Amit listened to Path EC last night, and the work CEO founder sounds like Dracula. Pretty entertaining call. That's so interesting. Amit, did you see Wejo day before funding had 4 times the daily volume with increase 20%, and the next day sell off 15%? Yeah, the SPACs, like this. By the way, Palantir is up 2% at 9:30. The SPACs are interesting because I don't know what's going on with them. Wejo's, I mean, like a lot of them are really weird. The only one that's amazing, I don't know if you guys know this, Black Sky Technologies. They're up in the past month or past week. They went up like 200%. Look at this. They were at $1.02 May 24th, and they got a big $1 billion governmental contract. They shot up to 370. So if you bought it at $1.20, I mean, you made a couple 100% on your money. So that's why it's interesting to kind of think about this. Amit, what do you think about Path? Also, yes, Kathy Wood did buy GM. For those who don't know, she did buy GM. What do you think about Path? Path is super interesting. I'm doing more research into them. The funny thing is I went to a Memorial Day barbecue, and one of the people there, his son is an AI software engineer at Path, and he got in, not in the founding team, but he was like one of, I don't know, the first couple hundred engineers. He made enough off the options when Path went public to like retire at like 27. So the dude retired. That's how much money this guy made. But then he realized he got really bored of it, so he came back to working at Path. But it's an interesting company. Kathy Wood believes in it, right? I honestly don't know much about. I know they create. I'm gonna read their description in a second. Yeah, Kathy Wood, 20 million shares. So let's go to their website, because honestly, man, I never even did research on them. And I know most of the Kathy Wood companies, but not this one. Hello, we're UiPath. We're making software robots so people don't have to be robots. Interesting. How software robots can help. Example from healthcare, improving patient outcomes. Doctor report, 100%, 5 minutes. Manual report, 80% automated by robots, 1 minute. Interesting. It's a big company. They work with a lot of other people. Big B2B business. Automate your business with UiPath. Okay, so they're an automation company. Again, I'm speaking very naively. I don't know much about them. But I do know their stuff is legit when it comes to software. The stock has been tanked because of the market, but the company itself and the software itself does seem pretty legit. Kathy's selling spot to invest in mid startup. Man, that would be legit. Okay, let me check out VLTA. James Velez, you asked me to check that. I'm sorry I haven't checked it out yet. I hope you're here. VLTA, Volta. Okay, let's do some quick basic numbers. Market cap 490 million. Price to sales 12. Okay, it's a little expensive, but granted, I don't know anything about what the company does, so we'll get into that. Negative PE. Okay, so let's go to them. Volta Inc. I feel like they have to do something with electric cars. I might be wrong though. Volta Inc. Am I wrong? Yep, the most utilized charging. Okay, so they're an EV charging station. So I'm big on tritium charging. The reason for that is because not only did Palantir invest in them as a SPAC, but they actually are doing a lot of stuff. I mean, they're internationally expanding. They're building new offices in the United States. Like, I really like tritium charging. So this is a charging station. The interesting thing about charging stations, okay, there's going to be some winners, right? Tesla's the biggest winner because they have the supercharger network. Like, it's going to be hard to beat Tesla. But if Polestar and Lucid and all these other companies become big and they have all these, and like if the I think how many cars are sold globally per year? How many cars are sold globally? Because if that changes to all electric, yeah, 66 million. If 66 million electric vehicles are sold, all those gas stations have to be converted into electric vehicles into electric charging stations. So how many gas stations are there in the world? There are 168,000 in the United States. How many in the world, though? I want to know how many in the world. There's got to be like a couple million, maybe 100 million. Wow, I don't have the answer. Thanks, Google. Such a great search engine. Can't even give me the. Okay, here we go. No, I don't want to know. Oh, 111,000 in the world? No way. There's 118,000 in the United States. Regardless, let's say there's a couple million gas stations. They all have to be electric. There's going to be some winner-take-all markets here, right? And that's why I think betting on this industry is interesting. The question is why Volta, why Tritium, why any of these companies? That's the question. Why these over the other ones? I've been buying Pat since 34 and I've been DCing ever since. Interesting. Wejo evaluation. Now, I did an evaluation on Wejo a while ago on YouTube. You can watch that video, but it probably is time to do an updated one. So we'll definitely get into doing an updated evaluation on them. To conclude the Kathy stuff, Roku's up 7%, by the way. She's liquidating Spotify. I don't think she believes in it anymore. I did a video on it like a day ago. I think The argument is that the Netflix subscription stuff is going to scare her. I mean, think about what happened with Palantir. Regardless of if I agree with her long term, she sold at 12 and then Palantir tanked to 6. And I think her team knew that it was getting ready to tank. Government revenue, for her credit, did slow down in Q1 2022. Now, granted, they didn't anticipate the Ukraine stuff, which I think is going to help it go back up. But they were right on selling. I mean, if it was the idea of selling to buy the dip on something else, they were absolutely right. Long term, I think they're wrong, but they were right in that moment. And it's an ETF, so they have to have some micro wins. On Spotify, Spotify's already crushed. So if she's thinking, let me get out of it because she thinks it's going to get worse, if she's right on it, then it could get worse. And the question is, does the bull market, the next bull market, because again, Spotify was a $387 stock. The previous bull market really took it back up. I don't know if the next bull market takes up a company like Spotify and Netflix. I think it does to some extent, but the question is, if Spotify drops like 60, does it take it up to 100? If Spotify stays at 100, it could go up to 150 or something, right? Like, does the bull market decide that even though premium subscriptions is slowing down and all this stuff, a rising tide kind of lifts all boats? There are some companies that theoretically shouldn't be able to recover. Like Teladoc, is that going to rise during the next bull market, even though we know how crushed they've been? I don't know. But Kathy's definitely betting on that. Amit, you think the U.S. grid will keep up and support the EV adoption currently? I'm 50-50 at best. Yeah, so the interesting thing of this, a good question about EV adoption. I think it's also interesting. That's why Enphase is so interesting, because I know there's solar panels, but they are building, and they're up nicely today. They are building technology that is only used by 1% of the US population, which are the inverters in the solar panels. And so if you imagine the electric grid, or just the grid in general, needing more support, solar panels will probably play a big role in that, in just like having energy reserves or being able to harness power from the sun in order to fuel the grid or reserve the grid in times when the grid is getting overpowered because there's so many charging stations, for example, using electric energy. And so those are the type of companies, given this industry is like less than 1% adoption, these are the companies that are like, maybe they could really explode. So the maintenance of the grid might be an interesting place to invest outside of the actual companies that are building like charging stations for electric vehicles themselves. EVs are a little bit overhyped. Tesla kind of won that category, and there will be some other winners. But now, what are the other companies in the electric vehicle space? It's why Wejo and Palantir's electric vehicle operating system, which I made a video on a while ago, and I'll probably do an article on it on dailypalantir.com soon to re-examine it, is so interesting. Because if they build the operating system for electric vehicle charging stations, which is basically connecting municipalities and cities and towns to make sure that at 5 p.m. there are certain levels of how many electric vehicles are being charged versus at 1 a.m. when there's not that much, right? That maintenance of that grid, which is a data problem, in conjunction with their investment with tritium charging, which actually makes the electric vehicle charging stations, to me it's like a three-headed monster, Palantir, tritium, and Wejo, that they're going to attack the EV markets with. And that's another, interesting reason to vote for them. Spotify Investor Day is starting in 5 minutes. The new Google of audio. Can we see Spotify's investment day? Can we live stream it? Spotify Investor Day. They have to be how to watch. Here we go. Here we go. Oh, we can watch it. You guys want to watch it? Yay or nay in the chat. It starts in 5 minutes. Oh, I meant just live. Okay. Do you guys want to watch this? Yes or no? I'm actually very interested in this.
She said, well, I waited.
Oh, it already started. Okay, let me know if you guys want to watch this. We can watch in a couple minutes. I mean, there's nothing else that's that interesting. I talked about most of the stuff I wanted to talk about. We talked about SPY. We talked about the Fed. We brought up the Roku Netflix situation. There's no really crazy breaking news. We don't get job reports yet. We don't have inflation numbers yet. I think that's next week. So if you guys want to watch it, let me know. I mean, for those who are either interested in Spotify or interested in general about Investor Day stuff, we can watch it. Maybe the Build Back Better plan may have had a purpose. Keep voting red and buying electric cars, folks. Okay, let's see. Let's watch. And let me know if you guys get bored of it or something you don't want to watch. And let me know if you can hear the audio as well. You should be able to.
Salve Massa, MB10 no microfone do lado de cá. Você aí em casa, na marcha do progresso, no trabalho, no ônibus, no carro, na rua, nos fones, no seu sossego, no seu conflito.
Okay, I don't know what they're doing right now. So we'll go to it in a couple. I think this starts at 10, right? It starts at 10 a.m. Okay, so the thing they're doing right now is just some preview stuff. Analyst Andrew Marcock upgraded Spotify to outperform from market perform to $150 price target, saying that it was inaccurate to compare the streamer to Netflix and its subscription. This is the big thing. Analysts are valuing it off of the idea that it's not similar to Netflix. And I think that's what Kathy disagrees with, given she's liquidating the position. And that's what she's thinking. Someone said DraftKings exploding. Let me look at that real quick. DraftKings. Why is DraftKings exploding? It's up 10%. Let's Google Draft. Now, DraftKings is down heavily as well, but DraftKings, why are they exploding? Anything interesting? Oh, they're just up randomly. Okay. Okay, cool. Yeah. So we'll watch the thing. Start in 3 minutes. I want you to hear the Pat CEO. I will definitely check that out on earnings call. Maybe I should make a video on it, Everclear. Should probably do that. By the way, if everyone can like the video, that would mean the world to me. That would help out a lot. It starts in a couple minutes. Let's give it a couple minutes and then we'll start. Any other big movers today? Nothing too crazy. Palantir's Palantir's at 940. Wow, Palantir's rising a little bit. We're 60 cents away from 10. Not bad. It's a good day to be in the market. Yeah, everything's green. It's a green day. It's a green day. Even though their music is not as popular anymore. I definitely stole that joke from someone else. Let me put watching Spotify Investor Day live. Let's do that. Let's tweet that out. Watching Spotify Investor Day live. Okay, we're going to start this streamy thing.
Find Dope Labs and all of your other favorite shows. It's so easy. And if you already listen to Dope Labs on Spotify, don't forget to follow us and tap the bell icon so you get a heads up whenever we drop a new episode.
So just to recap, Dope Labs is coming back for semester 4 with weekly episodes on Thursday, November 11. Listen to Dope Labs semester 4 for free on Spotify.
See you soon.
Kuas, Kanvas, dan Bulan Kesepian adalah sebuah serial podcast yang bercerita tentang seorang perempuan Capricorn sejati bernama Karina. Perempuan biasa saja yang punya mimpi akan pasangan yang sempurna. Sampai kemudian mimpinya ini membawanya ke dalam 2 pilihan. Ikuti petualangan Karin mencari jawaban atas kebingungannya setiap Rabu mulai 14 Juli eksklusif hanya di Spotify.
I'm going to change my camera right now because I know it's going to die. So let's just do that right now. And yeah, let's get into this Investor Day. Let's see what they've got to say. And again, the reason I think this is interesting is because Kathy's selling it off. So she must know that the stuff they're about to talk about in Investor Day is not what she wants to hear. They know this stuff before it happens. So I guess she's anticipating it's not going to be that strong. Or maybe it is and she's wrong. We'll see.
So is that a joint?
So I'm in prison. I'm talking to my car dealer.
Excuse me?
Hi, how you doing? You like BMWs?
I'm seriously turned on by them crying. Can I really put that out there?
Why is it trashing the American flag to take a knee? Isn't that a gesture of respect?
I've got too much empathy.
I don't like anything about this.
Doug choke you up, right?
It did.
We can't believe how many people enjoy the show.
I thought this was actually going to last a month.
We've surpassed our expectations. Why are we here? What are we doing?
Let's find out.
Cocomelon Storytime also has amazing tales from around the world.
As you can see, already the first problem here is they're showing these Spotify originals. That's already my first thesis problem with Spotify, is that they're not getting creators discovered. They're showing these random Spotify originals, which leads you to think they are more of like a Netflix because they're hyping up their own content, which is the problem because then you have to keep making your own content.
February 24th. Follow and listen for free only on Spotify. The end.
It's your boy DJ Academics. You know, listen, this is the first episode of my new podcast, Off the Record. You know, I had to pop out.
This can't be true. That Akon gave you a fake ass watch.
You finally met your match.
You going up?
I didn't make my match.
Why throw a punch Jack?
I just took it to my jeweler. I was like, yo, can you switch this for me? Akon gave it to me for my birthday. He looked at me and was like, what you mean? Akon did not give me this, my guy.
Should be starting really soon.
On an album, you don't got time to be a gangster, being a businessman. Okay. Every rapper's being a businessman.
Did I come here today with security?
No, you did not.
All right.
I don't think that's also smart.
Or
It's already going crazy.
Y'all get that the money. Y'all gotta recoup. Right. So do you think they purpose?
Super chat. Thank you, Adam Bergen, for being here. Let's go, Mitch. Shout out, hustle hard. Appreciate you, man. $10. Really appreciate you being in the chat. All right, let's see if it starts now.
Market of extortion.
Definitely not extortion. It's called respect.
I hit a couple chicks who was like fake ass. You hit the broke fake ass first. I didn't hit the rich fake ass. That motherfucker feel like a real ass. Oh God.
What's up, Spotify listeners? It is I, Alex Cooper, host of Call Her Daddy. On Call Her Daddy, we get real about dating, growing up, and almost everything else you can imagine. Call Her Daddy is making the relationship exclusive with Spotify, and I've never been more ready. Guests and I discuss topics like sex positivity, female empowerment, being single, relationships, and so much more. To join the Daddy Gang, tap the banner and listen to Call Her Daddy every Wednesday, free, only on Spotify.
Caso 63.
Bro, when is this stupid investor day starting? They're hyping up all their show. Like, yeah, I'm gonna wait till they're done with this. I don't want to just listen to their shows. Like, come on, bro. I hate when companies do that, bro. They say we're gonna start at 10 a.m. and then they just like, yeah, we'll take advantage of the audience and we'll just not start that early. DJ Academics got a Spotify deal. OMG, my boy's finally got his mom's basement. Yeah, DJ Academics, he's been at a Spotify deal. Yeah, he's like 100 episodes now on his podcast. And they paid him a lot of millions of dollars to drop exclusive content, which I also think is kind of the problem for this. All right, let's hope it starts. I'm going to put the volume on low and I'll just be talking. All right, it's starting. Here we go. We're in.
All right. Good morning, everyone. I'm Brian Goldberg, Head of Investor Relations at Spotify. It's my privilege to welcome everyone in the room and on the live stream to our 2022 Investor Day. Over the next several hours, the Spotify management team will be presenting a detailed look inside our business and the future opportunities we see for growth, followed by Q&A. Before we begin, please note that we're going to be making some forward-looking statements today, including projections or estimates about the future performance of the company. Actual results could materially differ for reasons discussed in our filings with the SEC. We'll also be referring to certain non-IFRS financial measures during today's presentations. So please make sure to review the disclaimers on the screen. And with that, let's get started with a short video.
Do what you love because the world needs people that love what they do.
Music is supposed to move, you bitch! Are you move?
Spotify's something that my kids can't live without. I mean, isn't that incredible? That's a bill that I have to pay.
Spotify's been a part of this journey since the beginning. We saw those numbers rise together.
Spotify, they got the playlist that you want. You like this song? Well, here's another song.
It's really about expanding our mission from just being about music to being about all of audio.
You don't do interviews. Why are you here? Alex, I'm a big fan.
Would you ever play Trump in golf?
Who's keeping score?
All I dreamed about was people listening to my music, how to touch more hearts.
You do it because you love to do it. I just want people to hear this shit.
I have more of a reason for what I'm doing. Sorry, I just got emotional like that, just fast, but that's real.
As big as we've gotten, there's still a lot of growth ahead for Spotify. There's really no other company competing the way we're doing.
Thanks, Spotify.
All right. Good morning and welcome everyone to Spotify's 2022 Investor Day. I'm Daniel Eck, and thank you all for joining in person and for those of you joining on our webcast. We are excited to be here with you. And today, you will hear from me and a few members of our team about their own observations on the big bets we're making, and we will cover our progress, our investments, and dig into how we evaluate success and how I believe that you should be thinking about our business as investors. I also want to talk about why I believe our future is a lot bigger and even a lot more interesting than what you might have heard of previously. Spotify went public in 2018, and 4 years into that journey, we have netted some notable accomplishments, and we all know that we've also weathered some challenges. But we've also morphed pretty dramatically as a business. And I'm not sure that that journey is fully understood, and frankly, we probably haven't done a very good job of explaining it. So
he's saying this because the stock price has cratered. I mean, that's like the main reason. If you haven't done a good job explaining it, it's because the stock price is down. Now, granted, the whole market's down, but this CEO, and I hope I'm in this position one day, he's trying to convince the world, hey, like, you guys don't get our business. You don't understand how big we're actually going to be. I know we've grown. I know we have 480 million people that use our product. It could be 1 billion one day, and here's why you should invest in us for the long term. He has to convince people of this reasoning in order for this to work.
Firstly, address these assumptions. To start, I believe we have a great product, and importantly, our business is doing really well. But what's even more, we're really investing in building a fantastic multi-sided platform that has all the ingredients to become one of the truly unique creative platforms in the world. And based on what we see, we are accelerating our moves to seize that opportunity in the near term, and the value creation opportunity is very high. But nothing inspires confidence like a proven record of success, and success that can be effectively replicated over and over again with better and better results over time. So let's take a quick look back at what we said we would do and what we achieved. So at our last investment...
Okay, so he's priming. He's saying, look, we can follow through on our mission. Here's what we've done so far.
Would differentiate Spotify in the market: ubiquity, personalization, and freemium. These are still the same foundations that drive our business today. So let's start with ubiquity. We share this concept of ubiquity back in 2018, making...
Yo, what does ubiquity even mean, bro? Why is he using this big ass word? I really don't know what that means.
It was something...
Oh, ubiquitous with something. It's like you're intuitive, like you when you think of music, you think of Spotify. Is that what ubiquitous means? I think that's what it means, right?
But today, Spotify has more than 2,000 partners, with integration spanning from wearables like watches to all facets of the connected life, including cars and even kitchen appliances. And this idea of creating a truly frictionless experience for users was really as much about engagement as it was about convenience. Today, what's also different is that listeners not only have access to all the world's music, but also have access to more than 4 million podcasts and an increasing number of audiobooks. And just like in music, thanks to our early investments in ubiquity, users can listen anywhere and everywhere. And this is something that our competitors hasn't prioritized, and I think it is because they don't really have the same approach. And this is still a key point of differentiation for Spotify. Ubiquity...
Is he saying the key point of differentiation is you can listen to us in a car? I'm just interested. Like, that's okay.
Coming from these 2,000 partners, and that's up from 14% in 2018. People who use Spotify on more than one device represent some of our most engaged users, with lower churn and higher lifetime value. And that's a metric we'll spend more time on speaking about today. And today, 89% of Spotify's premium users use Spotify on multiple devices, up from 75% when we last spoke to you. And further, this experience of innovating across different types of hardware with just about every player in the market makes us really well positioned for whatever comes next. And the more deeply that Spotify aligns with multiple devices, the more we also understand the listener, which leads us to our next foundation, personalization. So when you ask our listeners what they most admire about Spotify, more than 81% cite our personalization. And this is what we call discoverability. Spotify listeners view this as the reason not only to sign up for the service, but also the reason to stay. And they repeatedly tell us that we're the service that just gets them. And over time, our ability to find the right content for the right listener has improved significantly. And we are driving more discovery than ever before. For further proof of the power of discoverability, just look at the success of our annual campaign, Spotify Wrapped. So for the last 7 years, we've created a stop sign cultural moment when we celebrate how our hundreds of millions of users listen to Spotify by giving them a completely personalized experience to share with the world. And while the strength of our brand has been a key part of differentiation for the company, even we have been surprised by the longevity and virality of this campaign. And 2021 was our most successful Wrap to date, with unprecedented engagement. It was the #1 worldwide trending topic on both Twitter and TikTok, proving it's really more of a cultural phenomenon than ever. Our expertise in audio personalization is truly unmatched, and we've already begun to apply it to podcasts. And the final foundation that I want to outline for you from 2018 is freemium, the combination of our free ad-supported tier and our premium subscription tier. And our strategy was to be available to all consumers on all platforms. So if you wanted to reach the most number of users in a very competitive world, what's the most aggressive strategy you could have? Well, how about lowering the price point to 0? And this dual revenue stream approach, which now, by the way, is inspiring a lot of imitation across streaming, gave listeners a chance to try Spotify risk-free. And at the same time, it enabled Spotify to build a successful flywheel with our free tier serving as a direct funnel to help us establish a large and growing subscriber base. And there's no question that this model has performed exceptionally well. The low price of entry also helped propel our expansion into new markets, and it also provides a critical safeguard to enable users to continue to have access to our platform even in uncertain economic times. And it's really this funnel that has propelled our revenue growth. So as a reminder, when Spotify debuted publicly, we were available in 65 markets around the world. And thanks in large part to our unique approach, in just 4 years, we've almost tripled that number to 183 markets and territories. And this includes some of the biggest and most exciting audio markets in the world, like India and South Korea, and the entire continent of Africa.
It's important to understand they've subsidized their subscription there heavily. I mean, people get it there for a couple of dollars a month, which they want to get them into the brand, but it leads them to not become as profitable.
Also invested in fighting for platform fairness, including more payment choices for users. And I think there's no question that a fair and open platform really enables better consumer experiences. And it allows developers to innovate, grow, and thrive. And just last quarter, we struck a first-of-its-kind payment deal with Google. And while I can't talk about the terms specifically, I can say that they are beneficial to Spotify. And overall, there's no question that that will lead to new subscriber growth opportunities on Android devices around the world. And all of these efforts to enhance our experience have made Spotify more essential than ever. Our monthly subscriber churn rate has declined by nearly 30% over the last 4 years. So it's clear that investing in building the best product also leads to the strongest growth and healthiest business. But we are at a financial event, so let's get to it and talk about how this has translated into our financial goals that we set out. So first, let's go back 4 years. Looking at what consensus estimates from analysts were, we've met or exceeded them. we've delivered compounded annual growth rate of 26% for monthly active users, 26% for subscribers, and 26% for revenue on currency-adjusted basis. From 2018 to today, our investments really coupled with a clear focus on the core set of fundamentals have paid off nicely for Spotify. The lone outlier, that's gross margin.
He's like, yeah, we don't have any margins, but it's just kind of funny, right? Because this is the corporate way of like, you got to still package it. This is what everyone has to do at the end of the day.
And the other is that we're investing behind the strength of our business to make the business bigger, stronger, and more resilient. And I will share with you today that the music business is doing much better than you think. But we're also investing in expanding what Spotify is. Today, we want to share what we are building, what we call internally the Spotify machine. And compared to 2018, I believe Spotify is in a much stronger position. We are larger and we have a much more differentiated proposition. So let's dive right into it. In 2018, Spotify had 3 revenue generating models. So we had subscription, we had ads, and the beginnings of marketplace. And at the time, these 3 were really only being applied to our music vertical. But with a revenue split of 90-10, we were really just mostly a music subscription service. And ads was more of an afterthought, and marketplace was really in its infancy with only 20 million in gross profit contribution. But over the last 4 years, each of these 3 business models has evolved and grown. And today, they are much more robust in their ability to scale and drive revenue and gross profit. So what happened then to our long-term goals of 25 to 35% revenue growth and gross margin target of 30 to 35%? It really comes down to this. We saw the potential to be much more than just a music company. By leveraging what we learned and all of the technology we built in music and across other verticals, our ambitions became much bigger. And here's where those investments have taken us. We are now the world's largest audio streaming platform. But the prize we're going after is actually much greater. And as a consequence, the total addressable market is gigantic. And this is the Spotify we've been investing behind for the past few years. And this is the unrecognized narrative I referred to earlier. And it's a future that's much more exciting for listeners and artists and songwriters, creators, shareholders, and advertisers. And it has a lot more financial upside because of our ability to successfully combine and bundle multiple business models with multiple verticals into one user experience. And it's really under this one single experience that our model comes to life. It's a model with multiple verticals that have very different characteristics and gross margins. And I can confidently say that this model, in its totality, is doing way better than you think. So let's talk through this evolution. So as you all know, our company in 2018 was all about music. And when you isolate music, thanks to our marketplace products, its gross margins has been steadily climbing. And we're performing much better than you probably suspect, roughly 28.5%, which is significant progress in reaching our 30 to 35% long-term goal. What's been dragging it down is our move into podcasting. We saw such a significant opportunity to expand our platform and our audience, so we decided to go aggressively after podcasting. And this meant making a significant investment, which clearly has brought more listeners to Spotify and deepened the engagement, but it also impacted our overall gross margin. And while the podcast vertical is still largely in investment mode and not yet profitable, we believe it has a 40 to 50% gross margin.
Wow, they must be assuming the ads are going to give them those margins.
When we jumped into podcasting, there were really huge obstacles to overcome. We were a distant third behind the largest players in the industry, and everyone said we wouldn't be successful incorporating podcasts into what's traditionally been a music app. But where others saw challenges, we saw an opportunity to turn a nascent business into one of the most attractive verticals in the media landscape. And we applied the same winning formula as we did to music.
That is incorrect. People are not getting discovered for their podcasts. I've talked to over hundreds of podcasters because podcast discovery is not necessarily happening on Spotify.
And as a result, we dramatically...
Look at their homepage. Shows you might like. Spotify Original, Wall Street Journal. Are these random people? Is my random Palantir stuff popping up in front of them? No, it's popping up on YouTube. There's a little bit of a difference in terms of how discovery operates.
We've invested to bring some of the world's most popular talent. And
This right here is why I think Kathy's selling them off. She's like, you're investing to buy all of this stuff. What happens when they leave? What happens when you don't have the next Squid Game? What happens when Joe Rogan goes? How do you keep fueling content? You have to keep buying content, which means are you a platform or are you just a publisher of content at the end of the day?
Like later in this program. And I think this ability to leverage the state-of-the-art machine learning technology to improve the discoverability of podcasts, it's really in its early innings of doing for talk listening what our personalization did for music listeners. And it works. We're now the #1 platform that podcast listeners use the most in numerous markets around the world, including here in the US. In just 3 years, we've not only become a leading platform for creators and listeners, but we've expanded the very format of podcasting itself. And what's even more, all of these investments have resulted in user growth, retention, and increased engagement, with overall consumption hours reaching all-time highs, quarter after quarter. And despite all of this, we still think that there's incredible potential in this space. So while we may have traded some near-term gross margin in the expense of these investments, we really believe the impact that they will continue to have on our lifetime value.
Investors have to believe buying up all these media podcasts and serving them on the homepage of your Spotify feed is going to keep people engaged and will result in gross margins. That's what you have to believe in if you're investing in them.
Users to judge whether our strategy and investments are paying off. So we will talk a lot more about how we think about that and how we know that that drives our business. So to sum this point up, what our successes in music and podcasting has clearly demonstrated is that we've built a powerful machine and solid infrastructure that enables us to go after new verticals. And we're not waiting around. So several months ago, we announced the agreement to acquire Findaway, a global leader in audiobook distribution. And while we're still waiting for this deal to close, we believe that audiobooks in their many different forms will be a massive opportunity. Today, the global size of the book market is estimated to be around $140 billion. And that's inclusive of printed books, ebooks, and audiobooks, with audiobooks having only about a 6 to 7% market share. But when you look at the most penetrated audiobook markets, it's actually closer to 50% of the market. So call that annual opportunity of $70 billion for us to expand and eventually compete for. And just as we've done in podcasting, expect us to play to win. And with one major player dominating the space, we believe we will expand the market and create value for users.
They're talking about Audible, I believe. $70 billion revenue year. They make $70 billion off audiobooks? That's their argument? Okay, interesting. I really don't know why. It's interesting.
And while it's still early, we expect audiobooks to also have healthy margins above 40% and be highly accretive to the business. And here again, we will apply the same differentiating foundations of ubiquity, personalization, and freemium to attract both creators and users and drive engagement. But importantly, we aren't planning to stop there. We see the opportunity to continue to imagine and explore new verticals across our platform, within audio, but also beyond. And for each vertical, we will develop a unique set of software, services, and products and business models that's going to be tailored for that specific ecosystem. But again, all of these will live in one consumer experience. And while we aren't ready yet to share the verticals that will come next, I don't think it's hard to imagine how we will deploy this proven playbook against them, ultimately winning market share and innovating to expand the categories we go after. So to put
one of those verticals would be live audio, probably.
We're building really enables us to continue to bundle these verticals and business models into a single consumer experience. And that benefits users, creators, ad partners, developers, and Spotify itself. And each vertical we add also enriches the consumer and creator proposition, and it allows us to increase our margin over time with our fourth foundation, marketplace products. And this makes our model more and more accretive. And this then allows us to increase the LTV per user because we are upselling on our existing base. And as long as the LTV per user is positive and our gross profit grows, we will have more ability to invest to further strengthen our market position. So our team will share more today on how we think about optimizing LTV and our plans to reach long-term profitability. I'm not aware of any other company who has been successful in taking a multi-business model and multi-vertical approach within one user experience. We're much further along on this journey than you might think, and I have a tremendous amount of confidence in our ability to succeed. So what does then success look like? Well, we will firmly cement Spotify as the home for some of the greatest artists and creators and educators in the world. And that gets us to that coveted position of being the world's creator platform. A place where artists and writers...
Did they just say they're going to become the world's creator platform? Have you heard of something like YouTube or TikTok? It's a hard sell, man. It's a hard sell.
And this then allows us the chance to also become the preferred content platform for users, the place that they choose to listen, to learn, be inspired, educated, and informed, all while establishing deeper connections with the artists and the creators that they love. Lastly, with the world's top talent and hundreds of millions of engaged listeners, this gives Spotify the ability to attract the best brands and product partners. And we will keep on evolving, and we will keep on adding more verticals over time and expanding our business models to allow for more types of content and lets artists and creators monetize them. This is the Spotify machine. And this is the new definition of Spotify that I hope you will reorient yourself around when you think about our business and build out your models. To summarize, looking back at the best companies, I think names you're all very familiar with. They are vastly different companies today than when they started. And they might have made their initial mark in one specific category. Think books, search, desktop computers. And they then used that to redefine the way we think about those categories by expanding their potential through innovation. And these companies didn't stop there. They continue to expand and build on these strong foundations, applying their learnings and leveraging their customer bases to move into new categories, ultimately broadening their value proposition. And as a result, they built more resilient businesses. And this is the exact same journey we're on. We've moved from being a music discovery and playback service to a fully fledged platform where artists and creators can create, engage, and earn. A platform fueled by subscription, advertising, and creator service models applied to music, podcasts, audiobooks, and more. So today, it's really all about giving you all a much deeper understanding of where we've been, where we are, and where we're headed, and why. And in the next couple of hours, you'll hear more details from our team about what this Spotify machine is capable of. Next, Söderström, our Chief R&D Officer, will share more about our consumer experience and why we think we're uniquely positioned. He's then.
All right, we're going to end it there. This is going to go on for a lot of hours. Obviously, I'm not going to be streaming it for the entire amount of time. I am interested. I'll probably cover it in a later video. Look, everything he's saying, I get it. I think if you can't solve discoverability, you don't win as a platform. All the stuff he's talking about, LTV and subscriptions and premium and all, none of it matters if people aren't getting discovered. It's very simple. It's very simple. He's trying to paint a very complex, nuanced vision of the future of what Spotify can be, trying to redefine. No, it's simple. When people post something to your platform, does it get discovered? And from the far majority of musicians, because I have a friend who's trying to be a rapper, I know some musicians, and podcasters I've spoken to, it's not happening on Spotify. And again, this is not that complicated. If you paid a guy $100 million, he's going to be on the home feed. There's one of these. If you have deals with record labels like Justin Bieber, they're going to be on the home feed. It's really just not that complicated. So the story he's selling, it's really hard for me to buy it at the end of the day because it's simply a question of what content gets discovered. That is the extent of if your platform is reasonable. This is the Spotify home feed for sports. Spotify original, as you see right here. Spotify original. As you're scrolling through it, look at this. There's like 5 Spotify originals in a row, 6 in a row. If I go on YouTube right now, I don't see YouTube original. Let me go to my home feed right now on YouTube. Here, I just refreshed it. Undisputed, Skip and Shannon. I don't know if you guys know that show. Obviously, there's me at the front. Undisputed, Skip and Shannon. There's a thumbnail of them talking about Steph Curry. I click on it. Boom. There's the content. And that could be from random sports creators as well. The idea of not being this platform where you buy exclusive content like your originals and then you stuff it down people's throat versus giving inherent discovery to anyone that posts on your platform is the differentiating valuable for a successful social media platform. It's just that simple. The reason TikTok, YouTube, Twitter, Instagram are big is because they get people, when they upload their shit, to show your shit in front of someone else. Let me actually show you guys an example of what I mean. Let me show you an example. Well, that's why everything he's saying, I'm like, I get it, but I don't really get it. I don't know how you change that problem. Because, by the way, 2 things real quick to understand about Spotify. There's a structural flaw in how they're structured in this respect. They spent $700 million on exclusive podcasts, and that's not slowing down. Again, Daniel Ek just reiterated we're still in investment mode on podcasts. So if you're going to keep investing in exclusive content, let me make this very clear. If TikTok invests in exclusive creators, like literally gives them a bag for their content, those creators will be on the home feed. There is no discussion about it. Netflix pays for content, that content's on the home feed. Whereas a user-generated content platform says, hey, we're not going to pay people for content. We're just going to give them a machine in which they can post, and we're going to get them discovered. Why? Because attention is actually what matters, even more than money. So if you're investing $700 million in exclusive podcasts, and then on top of that, like the music business is just crap because all of the royalties go back to the record labels. At the end of the day, like Justin Bieber has the leverage here, not Spotify. If he takes his music and goes to Apple, 81 million little girls will leave Spotify in a heartbeat. Because they care about Justin Bieber. Music is one of those forms of music that you only have control over it if you are a record label, and Sony and UMG, they're the biggest ones in the world. When you've got music to put on the home feed and when you've got podcasts to put on the home feed, where does the creator show up? It's a very simple question I have. And it's not just for Spotify, it's for any platform. How does a creator show up if you have exclusive content dragging up the home feed? That is the fundamental issue I have with this platform. So now here, let me go into my analytics on YouTube real quick. Let me show you one of my most successful videos. It's the IBM interview I did with Sean. Here's the analytics right here. You guys can see the revenue it made. $456, 494 subscribers, 6.9 thousand watch hours, 29,000 views. Here's the big thing right here, reach. This video got 608,000 impressions. What that means is that when I posted the video, this thumbnail right here, it was shown to 608,000 times. Total number of times your video thumbnail was shown to viewers since the video was published. 2.6% click rate. That means after 600,000 times it was being seen, it was clicked on 2% of the time, which are accounted to 29,000 views. This is not just a question of YouTube scale versus Spotify scale. Spotify can do this for creators because Spotify has they have 480 million monthly active users. YouTube has 2 billion. Obviously, it's bigger, but nonetheless. This right here, impressions click-through rate, is not happening on Spotify. And when a platform is not, like, if I posted this IBM interview of Sean, do you think it would reach 600,000 people? Simple question on Spotify or on Apple Podcasts or Amazon Podcasts or whatever. And if that's not happening, how can you be a platform for creators? I don't get it. I don't understand that. If I'm not, like, this is really not complicated. If the shit doesn't show up in the home feed, the shit is not getting clicked on. It's very simple. Let me show you some Twitter analytics as well. So here's my Twitter profile. This is the tweet I had introducing dailypalantir.com. This was on March 18th. I'm going to click on analytics right here. 112,000 times this content was viewed. 5,000 engagements, 3,000 expands. This new follower number is always off. I don't know why Twitter's. There was more followers than one new follower. 396 profile visits. 112,000 times people saw this in their feed. So that's why I'm like, well, Spotify's not doing that. And so when they're telling me this vision about lifetime value and customer acquisition and all these different verticals, I don't care if when someone posts a piece of content, is it getting discovered? Or forget discovered, is there a chance for it to get discovered? And, you know, the reason I'm passionate about this is because I'm building a startup in the audio space, and I think we're going to solve that problem. And I think if we can raise this venture capital fund that we're trying to raise right now, and we can get the commitments. Like, I think we're going to build something that really does allow that discovery. And I just think if a platform is not investing in discovery, you're not doing anything. Now, Spotify for music is doing decently well. I'll give them that. They have a phenomenal music recommendation engine. But at the end of the day, again, I have a friend who has a rapper. He says he has to pay a guy to even listen to his music, to even put it on a playlist, to even get it discovered. It's not just a question of you have to be hustling and marketing. And it's like the platform has to help. I put a video out randomly on YouTube. 600,000 people see it. That is a question of YouTube doing a phenomenal job, not me. I didn't do any marketing for that video. And so Spotify is the scale. They have 500 million something active users. Can you give that level of discovery? And so I just ultimately doesn't think that's happening. Someone says impressions are lies, though. Literally just means they scrolled by. Look, I agree with you, Yehoovy. Impressions are like it's not something that you want to measure the content performance by, but it is something to recognize that an impression means your content was at least seen. Like, even if they scrolled through it for like 2 seconds and they barely caught the title, it grasped their attention. Advertisers pay millions of dollars just to get your attention for seconds to potentially get you to know about their brand. It is the most difficult thing in the world to get people's attention. So if you can then, if YouTube can take your content and out of 600,000, let's say, 300,000 people actually saw the thumbnail and got to consume the title, that matters. That really does. Even if you saw my face for 2 seconds, I penetrated someone's attention living in Norway for 2 seconds because they got to see my face. That's my point. It's like when a platform does that, a platform actually cares about creators, and I don't see any of that stuff happening. If I was a rapper, I would do rap memes first, ride the wave of other people's name, and then release my serious stuff. I agree, and there's a lot of stuff for creative stuff you can do for marketing, but the platform also should help in some respects. So, I'm passionate about this because I think Kathy would agree with my argument, is why she sold off another 300,000 shares. I'm building a startup in the audio space. If anyone's interested in potentially investing, email amit@dailypalantir.com. We potentially may be closing out the round. I think there's a market gap around audio discovery. I think there's a mass, and I know I sound crazy as some random 24-year-old kid who's from New Jersey thinking that I can solve the market gap in comparison to a $20 billion company like Spotify. But, I mean, if you got the juice, you got to drink it. And I think I got the juice, and I think I understand what I'm talking about here. And I think there's a chance we can potentially win. Even if we don't get as big as them, there's a shot. So, thank you guys for staying on this live stream. I know this was 2 hours. I hope you guys appreciated it. Probably will do some video coverage later on Spotify and some of the stuff that's going on in the market as well. Yeah, thank you guys for watching. Let me know your comments on this video after this stream ends. Would love to know your thoughts. Someone said, can I invest $100? You actually can. The minimum investment is $100. So it's actually, you can't, because we're using a crowdfunding platform and it's super easy to invest. It takes like 5 minutes to get set up. So email me if you're interested in @dailypalantir.com. Thank you guys so much for watching and listening. I'm looking forward to reading your comments. We'll be back tomorrow, another morning live stream. The market is actually, let's do one last quick look at the market. It's doing decently well. Palantir is up at 930. Everything's green. Things are pretty green in the market. Tesla is nice at 747, doing pretty well. So we'll see how this ends a little bit later today. Overall a green day. All right, guys. Thank you so much for watching. I will see you guys in the next one tomorrow. Bye-bye.